Good afternoon, everyone, and thanks for joining us. I'd like to welcome you to this week's Monday Minute Live Chat hosted by the Canadian Leadership Congress. And today we're talking about emerging markets and ESG, both challenges and opportunities. And here to address this topic, I have with me today Susan Jim, who's Investment Client Portfolio Manager in Emerging Markets with Martin Currie, a Franklin Templeton company. Welcome, Susan.
Thank you so much, Caroline.
Great.
Really
well,
excited.
look, I want to start out just by looking at ESG integration in general. A lot of asset owners, especially here in Canada, are very focused on this. When you talk to asset owners, what kinds of challenges do you see them running up against when it comes to emerging markets?
The first key thing, Caroline, is that there are just a lot of geographies and companies in emerging markets. So over 1,200 names, 27 countries. It's a lot of territory to cover, with each country and company within each country having its unique attributes in their ESG story. So we're talking about a really broad landscape. And I think embedded within that broad landscape is obviously, secondly, the political element, right? The fact that these political systems really impact these companies and stocks on a fundamental basis and also on an ESG basis. Specifically, we think the G, when you look at the ESG, the G is really important in emerging markets. Governance is where you spend a lot of time when you're looking at ESG analysis for emerging market stocks. And then finally, I think this is a market where we're really talking about those United Nations Sustainability Development Goals, those UN SDGs. Here's a fun anecdotal story. I'm a Korean American. I used to go to Korea as a child in the summers in 1980s. Back then, the per capita GDP in Korea was $3,500. That was the average income of a Korean in 1987. Today, that per capita GDP, $32,000. So in just one generation, you've had such tremendous changes in income opportunities and development. And so when we do actually think about kind of like the really big picture about development in emerging markets, it has a lot of very important things we talk about from a really big picture level as well.
Okay, well, and you mentioned the UN sustainability goals. They cover a pretty broad spectrum of environmental and societal challenges, as well as governance. What about data, right? So you've talked about governance, but if you are trying to reconcile your emerging markets holdings or an emerging markets approach with, say, the UN sustainability goals, where are you going to find the data to more broadly align those investments with your portfolio?
Yeah, so here's an interesting thing is that we find a lot of really good data at the company level basis. And so when we think about some of these huge bellwether emerging market stocks like a TSMC or a Samsung Electronics, what people don't often realize is what a meaningful part of the workforce are women. And women and gender, employment, development, women's work covers like 4 of those 17 UN SDGs. And, when we do this kind of work in the stock level, we can really learn that, for example, 80% of the technicians that work in TSMC's factories are women, 53% of Samsung's manufacturing headcount, 60% of AIA's employees, 36% of the Alibaba partnership. These are some really kind of good progress emerging market companies have made when we think about some of these concrete data points like women's work. When we think about other areas that we track from a big picture level basis, like data, the data on board representation is not great in North Asian markets specifically. So the micro looks good, but sometimes the macro is where we really need to work on. For example, women hold around 15% of corporate board seats potentially in Asia. And you compare that number in Europe, that number is going to be like 38%. In the US, it would be like 27%. So there's definitely a lot more work when it comes to some other elements of measuring ESG progress.
Great. And that's a good thing to keep in mind. When you look at country risk, right, if we're talking macroeconomically, how do you reconcile some of the risks you've identified or the characteristics you've identified around some of these countries with, say, a thematic or sector-based approach, like resources, for example? How do you pull that apart in an emerging markets context?
I think it really makes sense to benchmark these companies within their sector. Really thinking about, for example, if I'm looking at a metals and mining company, what is their usage of natural resources? Like, for example, what is their water policy going to be? Furthermore, benchmarking a copper mine against another copper mine in terms of their approach to their workforce and labor relations. So we think that, that sector-specific analysis really can highlight outstanding companies that are doing really good work when it comes to the different attributes of ESG. And then furthermore, what's really important for mitigating political risk is understanding the governance strength of a company. And that is gained through just really having constant engagement and constant conversations with the management teams regards to some of the key issues around governance. And what we mean by governance specifically for a company in emerging markets are things like who owns the stock, who controls the stock, who controls the management of a company, who controls capital allocation, CapEx. How is the management incentivized? What are the benchmarks used? What does the information disclosure look like for all of these governance attributes? We think doing that type of detailed conversation with management teams can really help and highlight companies that are doing best-in-class governance work.
Now, do you find that working to engage with some of these companies, say around governance, varies from region to region or country to country, depending on what you're looking at in emerging markets? How do you approach that?
With different companies, there's going to be a key engagement focus that's just going to be different based upon its unique experience and its unique exposure set. So, something that we spend a lot of time on with, for example, some of some investments in like Taiwan would be about water scarcity and the usage of water, because what you will realize is that water is a tremendous resource for the utilization of semiconductor factories. They need a huge amount of pristine water. And water scarcity in Taiwan has actually been an issue that has been persistent for the last few years. And so some of these key engagements will really be about business critical attributes that are linked to ESG.
Okay, let's look more broadly at that region, and let's look at China. China on the geopolitical stage in certainly the last few years and certainly the last couple of months has been a bit challenging. So what's your view on investing in China with a sustainable lens, especially now? And is it harder to do?
Yeah, so what's interesting about China is that there really is a broad array of companies to invest in. There is just many access points for investing in China. And, I would say the two key areas that most people tend to focus on in China are companies that are owned by the government, state-owned enterprises, or more private enterprise companies. And, you know, private enterprise companies in China have been some of the most entrepreneurial with the highest return on equities in relative to China, often generating superior return on equities. They tend to be in industries that are not traditional. They're more in new economy industries. And so, you know, those are some of the attributes where we think there's interesting fertile ground for investing in China is mainly on the private side, higher return companies, more entrepreneurial management that has its own destiny in terms of strategy and leadership. I would say that's the first key kind of a descriptor of Chinese opportunity sets. The second key descriptor is really about these opportunities in which there really is this kind of global impetus. And these are sectors where China actually does have some significant leadership in. These are sectors, for example, like electric vehicle batteries. So one thing people sometimes don't know is that 30 to 40% of the purchase of an electric vehicle is actually the battery itself. And China dominates in the manufacturing of electric vehicle batteries. And so this is one example of a sector that really does align to renewables, that does moving away from combustion engines, in which companies in China do have a global leadership position. So I think that's really interesting, is that you really can find companies that align with sustainability investments in China on the second part. And I think the final part really comes down to understanding opportunities for leadership within the region. So it's really thinking about not just leadership globally, but also potentially leadership within China. And, you know, I think a lot of the new economy, digital economy companies in China, they just have such a tremendous impact on the daily consumer in China. For example, when we think about Tencent and their gaming business, you know, there are anecdotal estimates that like 60% of the average Chinese gamer is spending their time on a Tencent title. So these are some very meaningful slices of your daily pie that these companies really do drive, whether it's from internet shopping or gaming or food delivery. The superstructure of consumption in China is definitely, you know, kind of moving towards this digital economy. And so I think that's a very interesting area as well.
Yeah, you know, you bring up batteries and battery power. That's a really good point. There's such an important part of the fabric of, say, creating electric cars and, you know, getting fossil fuel driven cars off the road. But, you know, of course, China is facing a fairly major challenge with COVID and a huge shutdown. How are some of these supply chain challenges coming out of China playing out across emerging markets, and how big a risk is it?
You know, I think right now the COVID shutdowns are impacting things like container throughput and some obvious mobility standards when we think about the number of people, for example, using the metro in the tier 1 cities of Shanghai. But, you know, these COVID shutdowns are something we've seen in multiple geographies, in multiple places. You know, I'm from New York, and we had our own COVID shutdown. And, you know, I think this is just par for the course in terms of the disruptions that are going on. The implications have really been more on a consumption demand side. So I would say things like travel, things like hotel, dining, on like retail sales where you need foot traffic. Those have been kind of like the most impacted from a China activity indicator purpose. But when we think about some of these more defensive areas like new economy spending, delivery, logistics, those have come in to really kind of save the day when it comes to the China COVID shutdown. So, I think that clearly it's something that China continues to navigate, and we'll have to see what happens. But the implications have been actually pretty meaningful on a GDP impact for this quarter.
That's great. I want to pivot back to ESG a little bit and talk about EShares. Canadian asset owners have been looking at EShares as a sort of a logical jumping off point to investing in Chinese companies. What does the ESG landscape look like applied to, say, EShares? And how do you approach that and think about EShares from a sustainability point of view?
So EShares are different in the sense that you definitely need to be a lot more stock level based, right? These aren't the old red chips that have been around for a long time. They're not like a China Mobile or PetroChina, like names that we've always known, and we have a longitude of financial data. And so when we think about these companies that are listed in Shanghai Composite, Shenzhen Composite, some of them are actually have that financial longitude as well. It's just that they have only just recently been part of the emerging market index. So, it really comes down to doing a lot more bottoms up work for companies that are listed in Shanghai and Shenzhen. And, when we think about the bottoms up work that you do from the ESG perspective, I'm just going to give you some like real world examples. It's going to be, for example, like the understanding of the principal founder of a company, an entrepreneurial founder of the company, and really thinking about, has this founder been able to really develop a professional bench? So a management team that can really expand and grow with this business. Are there any potential conflicts of interest between, say, the founding family and, other family members that might be on the management team? These are some of the real world ways that we have to really think about and questions to ask management teams when we're talking about some of these A-share stocks. Mechanically, how does governance work, and how is succession work, and how is compensation work, and what is the actual board structure, independence ratio? A lot of these are real nitty-gritties that we got to go into. And I think the second thing that's very interesting is just really doing a lot of comprehensive work on the landscape surrounding a company. So if you're going to invest, for example, in an electrical components company that's listed in Shanghai, you really want to really understand the competitive set very well and really understand how the number one, number two, number three players, and really think about what's going on from a sector level basis, especially when you think about things like efficiency and the demand for more electrical efficient products in China, because that is like a major component to decarbonizing China, right? Is like moving from kind of less efficient old school manufacturing to kind of more efficient, more modern infrastructure. And so those are some of the superstructure ESG questions we think about when we look at some of these great companies that are listed in the Asian market.
Yeah, and it mirrors what's happening in, say, North America, Europe, and other jurisdictions as well. We have this entire opportunity around the energy transition and creating cleaner forms of fuel and new technologies to facilitate that. You've touched on a few areas, but I'm wondering if you could tell me about some of the sustainability driven opportunities you have your eye on right now in emerging markets, perhaps Asia specifically, that are getting you really excited right now.
That's great that you say that, Caroline, because there is this rich history in both the US and Europe for companies that have really pioneered electrical efficiency. So whether that's companies like a Schneider or a US company like an Eaton, there are a lot of very kind of instrumental companies that have upgraded the kind of global manufacturing footprint. We think kind of one of the most important component to that is going to be semiconductors. And semiconductors pretty much go into everything. And, you know, I think that's just what's staggering is the movement of semiconductors to being from just your handset to laptops to ubiquitous semiconductors, right? It's kind of like a hokey phrase, but it is true. But the Internet of Things, right? Like now your refrigerator has semiconductors in it, your car has semiconductors in it. And one of the key areas in emerging markets where there is like true leadership is semiconductor companies. And that often gets hidden by the fact that semiconductors also, you know, trade in the US. But if we take, for example, looking at the memory industry. So when we think about the entire worldwide market for DRAM, emerging market Korean companies are 90% of that market. And so it just shows you that for something so ubiquitous, you often don't really know that it's an emerging market company that's really powering that and is a very significant size of that. And so, you know, I think that's a really good example of why emerging markets are so interesting, is you just have this leadership that is not necessarily well understood.
Yeah. Do you worry about this discussion around, say, onshoring post-COVID? You know, some of these essential technologies, batteries, semiconductors, a lot of regions or countries are thinking, kind of rethinking their dependency on other countries for providing some of these key tools, really. And do you worry about that impacting emerging markets, or are there other drivers that are really driving that market?
I think there is a really good history of cooperation between the US, Korean, and Taiwan kind of semiconductor companies, not just from like a formal investing perspective, like in the sense that TSMC and Samsung are building out a lot of capacity in the US, but just in the sense that like an entire generation of intellectual property, you know, came out of like Bell Labs, and then was developed through R&D, intensive R&D, and corporate commitment from a lot of these corporate leaders, TSMC, Samsung. And so, you know, we think it's a win-win situation that TSMC, Samsung, and the US are really thinking about a lot of large-scale investments in North America when it comes to new capacity. So, I would kind of flip that on the head and say that it's a positive in the sense that we're really able to kind of take that intellectual IP R&D leadership and domicile it somewhere else and kind of really make that part of the longer term growth outlook. I would say that's been one kind of offshore trend that has definitely been in motion. You know, I think there's definitely been some other alternatives. People have been looking increasingly at Southeast Asia as another form of offshorification. When you look at markets like Vietnam, that for example, was a heavy investment market for some Korean tech companies as well, for kind of like a different workforce. So yeah, I think that is definitely something that's part of a constant evolution. Where do you go for your next factory, next project?
Great. And I guess one more macro question. I keep throwing all the macro questions at you today, but you know, inflation is quite rampant right now. Perhaps it's transitory, perhaps not. How do you see that affecting emerging markets right now? And are there any specific emerging markets that are a little more susceptible than others?
I think the key thing right now is going to be food inflation. So food inflation is a really large percentage of most emerging market CPIs. So when you combine food and then maybe even like passenger fuel, we're talking 40% of your take home. It's really big. So food inflation is material. We really kind of need to see the evolution of food inflation for the next 4 months, kind of like the prime food season. I would say that's the first kind of area to watch in terms of inflation. The second area to watch in terms of inflation are just countries that tend to have this historical net importer of oil position. So say like a Korea or like an India, just really understanding the sensitivity to higher oils in terms of fiscal sovereign balance sheets. I think that's the second area that obviously people are looking at right now. Finally, we just kind of really need to understand the potential kind of inelastic and elastic elements of pricing and demand, because we're talking about a consumer with a different per capita GDP. And so we don't know yet if there's going to be downgrading of spending, moving it from one category to another. That's something that still has to be seen in terms of, how the emerging market consumer navigates inflation. What's different, I would say, a little bit more nuanced, is that we haven't had the severe wage inflation that we've had in the US. Like there's the slack labor force participation issue that we have in the US. We don't really have that in emerging markets. Most emerging markets are at full employment, and we haven't seen that wage inflation driven CPI issue. So I think that's a more nuanced positive in favor of EM inflation being a little bit more manageable.
Great. Well, this has been a fascinating discussion. I'd like to thank you for your excellent comments, and I'm sure they're going to be helpful for everyone who signed on today. And that wraps this week's Monday Minute. Don't forget to send us your questions, and we'll get right back to you with Susan's response. And we've got a lot of exciting content and great interviews lined up this year that you won't want to miss. So be sure to hit the like and subscribe buttons below, and visit us at leadershipcongress.ca to get our informative CLC newsletter. Thank you all for joining us, and see you again next time.